Hello and welcome to episode 42 of the Craving Crypto podcast. In today's episode, we're going to be talking about the stock market and whether it's going to have a 2008 crash again. So let's get right into this. Triangles, 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 and triangles. Talk about everywhere. We are seeing them in Bitcoin, we're seeing them in Cardano and EOS, basically across the entire market cap right now. And of course, we're seeing one in the total market cap as a result of this. And it's getting very, very tightly squeezed at the end of this range. So it really needs to make a clear decision here on this consolidation pattern. It just rejects, finds support, rejects, finds support. Notice how this support level has been respected very nicely. That's a good sign for the bulls. And we did break a little bit here, depending on how picky you are with your lines. You could probably draw it like this and say, no, we didn't break. Either way, this is getting really close. So we want to see either the $216 billion level broken down for the bears. If you guys really want to get happy with that short sell trigger button that you fell so dearly in love with on the bear market, then watch that level right there at 216. If the bulls are looking to take longs and get ready for a fifth wave action right here to the next resistance level, you could be really eyeing out that 221 level, because that's going to be the resistance point that was formed in this consolidation range. If we break out there, there's an amplitude move. So that means this triangle, all the consolidation, all the squeezing is building pressure. It's going to result in volatility. You measure the height of that triangle, you put it at the point that it breaks up. It's going to give you your upward target. Right now, it looks like we'll overextend our option one level by about $5 billion based on this target. Now, sometimes they overperform. Sometimes, more rarely, they underperform. And so that's just something you want to be aware of, is this target will take you up that high. And then this target will take you back down to the major support level here. Now again, they can underperform or overperform, so this bottom may be taken out if we do get a rejection off this level and start to see the selling action. Either way, you guys, just like in my last update, I'm really excited to get some type of a breakout out of this. Bitcoin already broke bullish out of its triangle, but it really hasn't shown a ton of upward strength yet. We're watching for it to make higher highs and higher lows. But just be aware that it's already breaking out. ADA also broke out and had a volume spike on the breakout. So there's lots of coins that are kind of carrying the market right now. So if they continue to see that strength, then I suspect this breakout to happen in the total market cap right behind them. If those start to see weakness and for some reason this all becomes a big false breakout and support levels start getting taken out, you guys, you need to really reduce your risk on the market for the short term, because there's a potential for another drop, like I said, down to these lower support levels. And the percentage that you would have to experience if you stay in the market is not going to be something that you probably want to experience, especially if you've been riding it down for very long, because you're talking about between a 22 and a 30% drop. Now, if we break out, we're going to get around 10% upside, but we could even get upwards of 15 or 20 as we go for those next resistance levels. Right now, the percentage downward is definitely greater than the short-term percentage upward, so that's why you don't want to be in the market if the support fails. When I woke up today, we were in a green day for the total market cap, and now it looks like we're in a red day, so total market cap's a little bipolar right now. So we don't really want to base a sentiment on that, considering that we're just in such a tight consolidation range that it's going to look like it's going up or down because it continues to get less and less volatility. We're not really basing any sentiment on the fact that we've got a lot of red, because it's very small amounts of red, very low percentages, no more than about 3% usually. If we want to find our top mover for the day, we're just going to go ahead and scroll down. We've got 0x up 5%. Electronium is up 9%. That one has really just been killing it lately. So any Electronium holders, shout out to you guys. I like to see you profiting off that. We've got Noah Coin picking back up from that dip that we saw. It's got a pretty strong short-term trend, it seemed like. And Elastos is up 12%. Okay, so we're looking at the data from when it first got added to CoinMarketCap sometime in February of this year. And we've seen consistent downtrending since then. There was a bear flag structure up here, which really took the market quite a bit lower, all the way down to this level where we saw a capitulation wick and a capitulation event. As you can see, this was a very impulsive selling move. The sellers got really emotional in that decision right here and started taking all of their coins off the table. And because of that, once all of them got out of the market and capitulation happened, you got a nice bounce. And then it fell back to support. This looks to be like a 1 and a 2 wave, and we are setting up for 3. So this could be really good for this coin on the short term and potentially the medium term, depending on your definition of time frames. I look at medium term as a few months in crypto, because crypto is a different time kind of frame than the stock market is. So yeah, this is breaking out. We do have inverse head shoulder pattern right here as well, which is nice to see. And then we got, you could probably call this a falling wedge. Some would argue that it's a bull flag. It's got very similar structure to either. Either way, this was a very good setup for the buyers, and they're coming into this market. If this resistance level is broken at $11, I suspect these next ones to be tested, where profit taking is likely to be taken at a lot bigger rates than it is right now at those resistance levels. This one isn't too bad, and especially if it dipped on the short term, like if you got like a rejection back down to the support level, that'd be a good entry for this one. But it's not quite as parabolic as some of the other top movers that we've been looking at previously. So this isn't necessarily, well, it's a little bit of a FOMO on the short term, but if you're looking at this and you're trading this on a bigger picture move, expecting a 3 wave, taking a small position here and then buying another small position if it dips isn't necessarily FOMO, it's averaging into an entry. So I just wanted to clarify that. 12% isn't like 30 or 40 where you're really starting to get overvalued on the short term. But yeah, that's my TA on the top mover for the day. Now let's get into the lesson. I want to talk about stock market because everybody is worried that we may be starting a huge correction in the stock market. So I want to give my perspective on this and some examples of kind of what bubbles look like, how you really should play trends, and why you shouldn't be looking at this sell-off as an opportunity to figure out when the entire trend is ending. Yes, there's always a potential for it, and I'll show you what type of market structure we look for before you can really confirm that we could be going in for a bigger sell-off. But there's no reason to jump the gun when something drops a few percent, you know, especially like the S&P 500. It doesn't drop near as much as crypto does, I'll tell you that. And so let's just look at kind of the percentage gain that we had from this move that everybody's panicking on. We're talking about a 2% drop in the S&P 500. Everybody's losing their shit over it. This is just one of those things, you guys, like, don't fight the trend. What is a trend? That means that we're making higher highs and higher lows. That's an uptrend. If you make lower highs and lower lows, you're in a downtrend. And this, since 1970, has been building the structure for a really parabolic move on the upside. And when you get this type of structure, it usually has to FOMO a long ways before it gets overvalued to the point where it needs to make a big correction and a huge kind of sell-off structure. So the easiest way that I can really teach you guys to look at this would be to wait for market structure. Now, if we want to analyze what happened to Bitcoin, we can pull up the chart from back in the 2018, beginning of the year, when we started to get that bullish structure, that bearish structure, that bull trap forming on Bitcoin. And this kind of compares it to Apple, and it shows that you don't want to figure out exactly when the top of the market cycle is. You wait for the first real sell-off and then reduce your risk significantly on the bull trap, set your stop loss at the bottom of the bull trap with the rest of it, and get ready to short if that level fails as support. So with something like the S&P 500, if we went in for a bull trap right now, you'd look like this. We start to panic sell, we drop below our trend line, and we bounce. Why? Because everybody thinks their trend is going to return to normal in a bull trap. This is where you reduce your risk and you set your stop loss at that previous low. What happens is if the market comes and does a double bottom and keeps going higher, you stay in with some of your position and continue to ride this huge trend. If the failure of support occurs, you get out of the market before you get exposed to too much downside risk. This is painting a potential of a 1, 2, 3, 4, 5 Elliott wave. 1, 2, 3, 4, 5. So an ABC back down to support is always possible here. But I'm not going to try to call the top on this wave. You just really want to make sure that support level fails and you get a bull trap structure before you jump the gun on that move. With stocks, don't fight the trend, you guys. Don't decide that this is over. I want to show you one graph that's a little bit more bullish perspective rather than showing you what might happen if we start to correct right here. This is a really amazing chart made by Swenlink on Twitter, and he basically just goes to show how the crypto bubble looked exactly like the internet bubble, and then how the Dow Jones today looks a lot like the crypto bubble and the internet bubble did. So he's showing that we could go parabolic for a lot longer before we get that bull trap structure based on this fractal and based on previous bubbles that we've experienced in the past. And so I just, got his link right here. Shout him out. If you guys want to go ahead and follow him, you can. But that's just showing that you want to expect continuation. Really, this is an opportunity to buy the dip with a tight stop loss because everybody's panicking. And if we continue to see upward trending, then you're going to make a lot of money on the short term here in the world of stocks. But if you do get that support failure, then you've got a strong trading plan based on the structure of the market to kind of avoid the risk and play it based on whatever it does. So we've got an inverse head and shoulders pattern forming here. If we can get above this neckline, we're going to look good for the S&P 500 on the short terms. That's my lesson, is to look for bull traps, watch for the structure. Don't try to call the top on a huge trend. There's a lot of optimism in the stock market right now, and if you understand market cycles, starts with a ton of optimism, the media starts covering it a little bit, and then they go crazy over it as it starts to get to the top. I think that the media has been covering it, but I don't know if they're using this wording that you really look for at the top of a market, like, oh, this will never stop going up. They see continuation and they're optimistic, but it's not like they're attached. And that's just based on the wording that you can see in the media. In my opinion, that's obviously just me kind of analyzing that and getting my view on it. But just understand that optimism comes before the real overvaluation. And then the real overvaluation creates the bull trap, and that is what initiates a selling pressure to come. Those are my bubble reminders for the stock market and some things that should help you avoid any losses in the coming movement in that space. You can click on the charts and look at the technical analysis that we did each week right here. We've got Binance. If you want to do cryptocurrency trading, you can sign up here. We've got Coinigy. If you want to do technical analysis on altcoins, you can sign up here. And BitMEX if you want to do leverage trading. And then my Bitcoin address, if you like what I'm doing, you can send donations that way. And the VIP course if you want to get more hands-on with your trading. Hey, thank you so much for tuning in today's video. I hope that you learned something. If you have any questions at all, go ahead and drop them in the box below. Hit that like button, hit that subscribe button, and I will see you guys in the next videos. As always, stay profitable out there.